Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to take a look at a FASB exposure draft that's dealing with something that's kind of interesting. There's significant diversity in practice here, and that is share-based payment or share-based consideration payable to a customer. Now, this is not a recently issued exposure draft. In fact, it came out in September. However, we've been so busy on the blog with so many different topics that we haven't gotten to it. The comment period is about to end, though, so we wanted to make sure we squeeze this in before the comment period ended in case this is something that impacts you and you want to provide feedback to the FASB. So this was issued on September 30th, and it's really addressing diversity in practice for share-based consideration payable to a customer in conjunction with selling goods or services. There's diversity in practice out there around how certain conditions, specifically customer purchases, are whether they are service conditions or performance conditions because they have different accounting treatment. And so there was a request to kind of provide some guidance on which classification would be appropriate. In addition, there were some issues around how forfeiture accounting worked when we did have the different types of conditions. And so we're going to take a look at both of those today. So a little bit of history so that we understand where this is coming from. Obviously, this is related to topic 606 because we're talking about a customer here. And so the guidance in topic 606 requires an entity to account for consideration payable to a customer as a reduction of the transaction price. So for example, if you have a university who's charging tuition and then they give a customer, a student, a scholarship, that is not an expense. It's a deduction from the revenue. So if you're charging $30,000 for tuition and they get a $10,000 scholarship, then net revenue is $20,000. So we do not book a related expense. It is a reduction of the transaction price. Now, there is an exception to that when the payment is in exchange for a distinct good or service. So if you're buying something from the customer in reverse, and you are now becoming the customer. So in this scenario, work study. If a student is working for the university, that payment obviously does not offset because they're doing it in exchange for their service on campus. So that's the background on topic 606 when we have consideration payable to a customer. And we had a recent clarification, ASU 2019-08, which addressed share-based consideration payable to a customer to clarify what guidance we were under. And it requires that a grantor apply the guidance in topic 718, which is our stock comp, to measure and classify share-based consideration payable to a customer. The catch here is that when we have certain conditions, particularly vesting conditions, we have to determine if they qualify as a performance condition or a service condition. And that impacts the accounting. So in a performance condition, you are required to estimate the probable outcome, whether the share-based consideration is expected to vest or if it's expected to forfeit. Versus in a service condition, there is an option. There's an accounting policy election that they can elect to account for the forfeiture as they occur. So when they elect to account for the forfeiture as it occurs, revenue recognition can be delayed for awards that are not probable of vesting because they haven't done the probability assessment. And so as a result, currently the definition of performance condition and service condition don't explicitly discuss purchases made by customers or parties that are going to purchase a grantor's goods or service from the grantor's customers. And so as a result, this is going to address the diversity in practice. So in this scenario, we're going to hit on two different things. The first thing we're going to do is we're going to incorporate the conditions, including vesting conditions that are based on volume, monetary amount, or timing of a customer's purchase of goods or service from the grantor into the definition. So the definition here is going to incorporate and revise the definition of a performance conditions for share-based payment to address some of these types to make it clear what is the proper treatment. And the revised definition would also incorporate performance targets based on volume of purchases made by other parties as part of the update. In addition to that, we are also seeing the term performance condition updated, and you can see here some of the items that have been updated. So we're going to update to be more clear if it's a performance condition or a service condition. Now, we do expect there to be, as a result of this, fewer service conditions because as you saw, a lot of the terminology there really was updated in the term performance condition. As a result, we don't expect as many of them. However, for awards with service conditions, it eliminates the policy election to allow them to account for forfeitures as they occur. And so when measuring share-based consideration payable to a customer that has a service condition, the grantor would be required to estimate the number of forfeitures expected. So it wouldn't delay that recognition. You would include that probability as separate assessment. Now, separate policy elections for forfeitures would remain available for share-based payment awards with service conditions granted to employees and non-employees in exchange for goods or services to be used or consumed in the grantor's own operations. But again, that's going to make a nice clarification here. It would also clarify that a grantor should not apply the guidance in topic 606 on constraining estimates of variable consideration to share-based payment payable to the customer. All of the assessment of probability would be under the vesting guidance in topic 718. So make this easier, more consistent, should reduce some of the diversity in practice here. So really hit on the two big items. Is it a service condition or a performance condition? We updated that definition to really explain the proper classification, seeing hopefully less service conditions. But when there is a service condition, we would still have that guidance that would bring the accounting more in line between the two. So as I mentioned, comments are due November 14th. So we wanted to get this out there to you in case this is something that does impact you or your client base and that you could give feedback to the FASB. All right, with that, I want to thank you guys so much for joining me today on the Genuine Learning blog. And I look forward to seeing you on a future blog. Have a great day, guys. Bye-bye.